hands within less than a week. All you need is a minimum investment of a polite 100k and a minimum top-up of 50k whenever the extra money checks in to grow your savings. Call us today on 0312 305 600 or send an email to clientservicesug@britam.com to get started. Britam Asset Managers is regulated by the Capital Markets Authority. Terms and conditions apply. Britam, with you every step of the way.
Now that we've worked out a plan for our financial goal, we now need to go into the saving. There are 4 things to note here. The first thing is, first of all, what is this financial goal going to cost us? 2, how much do we need to save regularly in order to meet this financial goal? And then 3, where are we going to get this money from? And then 4 is, how frequently should we save? So let's go back to the first one. How much is that financial goal going to cost? Let's take an example of retirement. It's really important, for example, to start figuring out or to figure out what retirement is going to cost. So it typically would be an estimate. What are those 20 years or 30 years going to cost us? And then have a way to work backwards to tell us, you know what, in order to reach that big number that we have estimated, we need to save a certain amount of money every month. Once we've worked out what we need to save, where are we going to get these savings from? Sometimes it might be from your salary, it might be from your income from the business, or a combination of those two. And then very importantly, how frequently should we save? We typically recommend that save every time you earn an income. So that some people earn income daily, some people earn weekly or monthly. Most of us earn monthly. So those are 4 things. 1 is determine the cost of the financial goal. 2, determine how much you need to save, and then where are you going to get these savings from. 4th is how frequently should you save, which we recommend every time you earn an income.
We go through life hustling, doing different jobs to make ends meet. No matter how strong you are, age will eventually catch up with you. Your hope of a comfortable retirement is saving for old age while you still have energy to work. Uganda Retirement Benefits Regulatory Authority, the regulator of all licensed retirement benefit schemes, UBRA, encourages you to choose from any of the licensed schemes and start saving, whether employed or self-employed, to avoid regret during your old age. For more information, call 0417-304-500. This message is brought to you by Uganda Retirement Benefits Regulatory Authority.
Football packages, great entertainment,
sports, the local content, telenovela, the movies. There is something for everybody. GoTV, this is where the stories live.
Get the best entertainment for any budget. With GoTV, you will have great entertainment for as little as 13,000 Ugandan shillings per month. GoTV, great stories, Zidiwano. GoTV Uganda, love it.
Smart 24, driving business.
The money immediately. I know people who they left their money there. Any money they get, they put there, they keep aside. They keep aside literally. And recently, they needed to use it for investing in some other thing. So they got it out and literally invested in it. They could replenish. You literally apply, send an email. You don't have to go to the offices, to the physical offices. No, you literally send an email. In writing, you say, this is what I want, and this is how much I want. And you don't have to withdraw everything. And you have this, you have your return that you've earned over time. Those are the benefits. How long is the question? He hinted on it, but every one of us has a different goal. We all came to school for different purposes. And I don't know where your purpose is. Probably you want to start a procurement firm. Someone else may want to be employed in an organization. Someone may want to start a business. They just want to have a bachelor's degree and start a business. So what is your goal? What is your future? What do you hope to do? Do you think you need cash immediately? Do you think you need to put aside money for the long term? Because possibly, if you have the money nearby, you may spend it on a phone. You may spend it on a car. You may spend it on Tusimbude, which is KFC. You may spend it on something. So you want to put the money aside diligently over time. So ultimately, like you said, you really have to make, in the financial, you learn finance. So the personal financial plan, an investment goal, your personal investment decisions, what influences your investment decisions. And therefore, you can be able to choose between a unit trust, shares. I hope I've answered the question a bit.
To add on to that, I'm also inquiring, because it's about buying shares. The person who has bought shares and the one who bought shares. So I'm to advise that. Then I'm under current. So I would like to know, can a company now try to deal with other companies and still they are trading?
Just a second. I want to take you to a slide. Just give me a moment. Okay, so you remember this slide where he talked about the securities exchange? That's the secondary market. Now the company, if I get your question straight, can a company deal with another company in terms of okay, let me hope I understand. Can Martin Owini Incorporated trade with Terence Tumwini Incorporated and exchange shares?
Or want to buy from another?
That's interesting. That's a very good question.
Remember, he's a procurement student.
He's a procurement student. He's a procurement student. If I hear your question straight, can the company, Martin, sell his shares to Terence as a company, part of the share holding? And that's where, in the beginning, he talked of Greenland Bank, which is primarily, among other reasons, why later, a few years later, the Capital Markets Authority was started in 1996. Ultimately, why the Capital Markets Authority was started is to protect investors, to approve of prospectuses. What is a prospectus? It's that document that a company presents to the authority and later to the public about these, about the shares that they are selling and the vision of the company. It's a document, like a pamphlet. Just raise up that book. A little thicker than that, but it talks about the vision of the company. It talks about what the company is going to do in the next 5-10 years. What are the risks that it sees as an industry? Where can it grow? And that's the prospectus. So the CMA approves of those prospectuses before they come to the public, and then they actually raise capital. So back to his question. Can a company sell shares to another company? As the CMA, we think it is wise for the company that is selling shares to come to us.
Unless it is privately
owned. Because if you choose to go public, then you have to engage us. And there's a minimum number of investors that you have to look for. There's a minimum size also. There's a bit of requirements that you're supposed to meet before you actually go public by the Securities Exchange. For example, they say you're supposed to be able to meet the IFRS, the international accounting standards, or you're supposed to be able to be profitable for about 5 years. There's supposed to be a governance structure. All those things have to be in place before you actually go to the public. Does that make sense? There are incidences where a company is actually looking to raise capital. Company X, my company, right now I may be dealing in, say, bricklaying. I'm just giving an example. Bricklaying. And I really see that I have a number of customers lined up and there's all these business prospects, but I need capital. I need to be able to set up other bricklaying facilities. And where can I go? I now engage Martin, who might be a private equity firm. This is another engagement. Who has heard of a private equity firm? I think let's start here. Private equity? Private shares, just shares. Shares. Yeah. Shares. So private equity company, Google or something, could be someone, he is a business that literally deals in investing in businesses. Private equity, in summary. It is a business that deals in... question is. That's what his question is. It's possible, that could have been his question. Yeah. But private equity is a business that deals in investing in other businesses. I could invest in Dr. Millie's business, I could invest in Dr. Nala's business, I could invest in his business as well. But that's his primary role. He keeps looking out for businesses that are performing well. So I could approach Martin and tell him, this is my business prospect, this is what I want to do, this is where I look to grow as a bricklaying company. And then Martin gives me some money in exchange for shares. It could be in exchange for debt, a short-term debt. And that's something also the Capital Markets Authority is looking into, because we've seen companies actually raise capital through these means. They've grown through these means, but there must be a relationship. And Martin has to be registered as a PE firm, private equity firm that actually invests in shares. And then by the time I come to him, my investment is actually going to an established company. And we are considering regulating those. That's a discussion that's ongoing in the ways that we can be able to engage them, the private equity firms that can be able to invest in other businesses. Because if they're not going to sell shares publicly, they could be able to sell shares privately. If that makes sense. Are we together? They could be able to sell shares. It could be on a short-term basis. It could be on a long-term basis. That depends on the relationship with the firm. I want to just...
Thank you for the opportunity. I asked 2 questions, but you answered one. The question left out was about how much do I need? I'm forgetting that number.
How much do you need? Okay, we're going to answer that. Any other question? Yes? Could you be a bit...
My name is Antonio. I'm asking only 2 questions. One is, how do I move from one stock broker to another? The other question is that, in case I have shares, like I've bought shares, can I be able to go, like I've got like 500, I'm buying shares in maybe Equity, and then maybe I get some other money and still I want to make some amendments. How do I do that? Is it allowed, or I just have to stick on the shares which I've bought and I wait for them to expire?
Thank you, Doreen. One more question and then we'll...
Apajok Susanna, my name's student of procurement, 3rd year, 2nd semester. My question is, if I'm an individual, I'm not an organization, but I would like to get shares maybe from Omeme or Standing Bank. What are the conditions for me to get the shares? Because for a registered company, you're supposed to have a trading license, you're supposed to have a certificate of incorporation. Hope I'm right. For an individual.
Okay, thank you. Tell your friend 100 years. Sorry, 100 shares. I was checking if you're awake. That's why I said yes. Okay, tell your friend 100 shares. Okay, what are we trying to say? That's the minimum shares that you need to buy. And it varies from company to company. That's why I gave you the MTN example. Remember when I said, what is 195 times 100? 19,500. Round it off to 20K. You can buy shares. Okay? What's the minimum for unit trusts? 100,000. What's the minimum for treasury bills? 100,000. When I'm going to buy, what do I need? My national ID, my refugee card, my passport, okay? I just need to be able to identify myself. Once I've identified myself, a few passport photos, they will open an account for me, okay? And the names will be Martin Owens Collective Investment Scheme account, okay? Or, which is the other one? The CIS. Okay, then there's the one for shares is called what? CSD. Which stands for Central Security Depository. If I'm buying shares, I have opened an account at the Central Security Depository account. Okay, there's a registry where that is held, and what actually happens, I can then put my money. That's where the record of my shares is going to be. Same thing, national ID. The issue here in terms of risks is share prices go up and they go down. Unit trust, I get a return. But in a high inflation environment, I may be in a situation where inflation has gone up. I'm losing value. What do I do at that point? I say, take your units, give me my money, because I'm now taking my Uganda shillings to put them either into Kenya shillings or into US dollars to cushion against inflation. Okay, and within 48 hours, I will have my money. Can I move from stockbroker to stockbroker? There's actually no reason to do that, because remember, I now have a Central Security Depository account. And guess what? Have you ever seen a stockbroker in your life? Never. There's one right here. Okay? And she's going to tell us what she does if I want to buy a share or I want to buy a unit trust. Hear it from her, because maybe you didn't believe us. Welcome. Jovian. Introduce yourself and...
Thank you, Martin. Actually, I do help individual students like you, companies, investment clubs, institutions to invest and make money by investing in products such as equities, which are shares, and then unit trust very soon, and then treasury bills and treasury bonds. I'm boss at Jovia. I work with SBG Securities, which is a sister company of Stanbic Bank. We sit at Crested Towers, ground floor. So our work basically is to help you make money, because we know you're busy, you're students, most of you. So you don't have time to run up business or start up business. So our work is to help you invest the money so that your money will make money for you while you're here studying. You don't need to look for a building where you pay rent, electricity, workers. No, we want you to concentrate on your books for now. Just give us your money so that we make your money make money for you. I think Martin had already explained how to...
Yes, let's take them through the process. We have 20K, 100K, whatever.
Okay, so the minimum number of shares to to start investing with is only 100 shares. So you may ask me, how much is that? How much money do I need? It depends on which company you're investing from. We have 9 listed companies right now locally. Among those, we have 3 banks. We have Stanbic. Stanbic right now is trading at 25 shillings. So how much do you need? You only need 2,500 to own Stanbic Bank, with only as little as 2,500. Yes. NIC is trading at 5 shillings. So to buy NIC 100 shares, how much do you need? 5,000. I believe most of us have 5,000 here. Umeme is trading at 240. So you need 24,000 to own 100 shares. So do not give excuses that for me I don't have money. We believe as long as you can have 10,000 with you, you can become an investor. So giving an excuse that we don't have money, we believe you all have access to 10,000. So you can own even more than, with 10,000 you can own more than 3 companies. The minimum is only 100. And this is the beauty, you need to open up a shares account. These accounts never go dormant, whether you bought shares or not. So I believe today, at the end of this, we are all going to open up accounts. These accounts are free of charge. We only need your photo and a copy of your ID. And we have the forms with us here. If you don't want to fill in a physical form, you can go on the USE website and use the Easy Portal. You can take a selfie if you don't have a photo. So you just take a selfie. We'll take you through how to open up those accounts. They are free. You don't need any money. Then you can start investing. The minimum is only 100 shares for each company. Yeah.
I hope we've answered all the questions. And also just to add, I think it was Doreen's question. You can invest in, like she said, in 3 companies. You don't have to invest in only one and wait for it, or invest once and then just wait. You can actually invest, and then when you get more resources, you can still come back to her or all the other players that you choose, and then you can say, I want to top up and invest more because I believe in the vision of Martin Owini's company or Teresa's company, because I have seen them. I buy data from them, or I bank with them, Stanbic Bank or DFCU, or I buy, I think they do very good clay in terms of brick, and I think they are a mini monopoly, you could say. I mean, these are different perceptions you can choose, and then keep investing in this. Any 10K you get, I want to buy. You have a mobile money platform where you can be able to,
yes,
for ease of purchase.
Yes.
So there's no excuse whatsoever, really. You don't have to go to the offices. There's an email you can write. There's an online portal that you, really, I think things are now much easier now. There's a question at the back there. If you don't mind raising your voice, your hand, and are there any other questions? When do you get your profits after investing shares?
Good question.
Very good question.
Very good question.
Let's take one more and then we answer them together. Is that a question? Yes. Stand up, your name, and... I'm sorry, can you turn louder? Yes, sir.
My question is, can I
when can I move out after investing, right? Okay. Over to you.
Thank you so much for those beautiful questions. And number one, there's a lady who asked, can you have both unit trust and then shares? Yes, you can. Because remember, with you can have unit trust if you want to do short term. Because remember, with unit trust, especially if you do the money markets, the shortest period is only a month. After a month, you can redeem and get your money out. But if you want long term, with equities, we tell you go in long term. Because you may come short term and then the price, remember with equities, prices go up and down. So if you come in short term, you may be burnt or you may sell at a loss, which we do not want. Because we want, when you come to invest, we want you to make a return. So those who want to do short term, we tell you go in for unit trust. And those who want to do long term, come in for what? For equities. But since you're still students, we tell you can do both. If you have 100,000, go in for unit trust. And then if you have less than that, you can come for equities. So you can do both. Then someone says, if you want to how long does it take you to get a return in equities? Now, when it comes to capital gains, we can't tell you in such a period the price is going to go up. Look at it like people who do forex trading. You don't know what the rate will be tomorrow. The same thing with capital gains. The price can go up tomorrow or it can drop. So with capital gains, you need to know what price did you buy at. You might stay in for, let me say, a month, 2 months, or even 3 months when the price hasn't changed. So with capital gains, we can't tell you on such a day, you can pull out the price will be this, because it depends on the forces of demand and supply in the market. Now, when it comes to dividends, we can tell. How do we tell? Companies at the end of the financial year, they do announce their financials. And in case they've posted a profit, they'll declare that we will be paying this much to the shareholders.
That's the question she asked.
That we will be paying this much to the shareholders. Now, some of the companies have already started publishing their financials. Umeme published, and they say they're going to be paying a final dividend of 54.1 shillings per share. So you know how much you're going to earn and when, because they'll set out a date when that money will be paid. Uganda Clays is going to be paying 1.3 shillings per share. So when you look at those companies, with dividends you can tell, because companies announce and they set that date when they're going to be paying. So you can tell. With capital gains you can't, because you don't know what the price will be. Capital gains, it depends on the forces of demand and supply.
What is a capital gain?
Yeah, that's a very good question. What is a capital gain? A capital gain, this is one of the ways how you can benefit in shares. You buy the shares when the price is low. Then when the price appreciates, you sell your shares. Let me give an example. Like a month ago, Umeme was trading at 180 shillings. But right now, as we speak, the price is 240. So whoever bought the shares at 180 and they are comfortable with the increment they've made, they can sell. That's what we call a capital gain. A capital gains is the difference of the price you bought at and the price you'll be selling at. You buy at 180. Right now, the price is 240. If you're comfortable with the increment, you sell. Let me give another good example of UCL. There was a time when UCL, like 2 months or 3 months ago, Uganda Clays was at 5 shillings, 5-6 shillings. But right now, as we speak, Uganda Clays is at 22. So whoever bought Uganda Clays at 6 shillings, right now, they've made more than, how much? 70%? So you buy at 6. Right now, the price is 22. That's what we call a capital gain. You buy at a lower price. When the price increases, you sell your shares. And that's where, if you want to invest in equities, you should be looking out for capital gains, because that's where you earn more.
Guys, I want to ask you a question. Did I lie to you? Have you heard it from her? Yeah. I think she's put it so well. Can we give her a big round of applause?
I think there's just one more question. When do you exit? He asked if I want to exit. What happens?
Okay, so if you want to exit, like I said, if you're comfortable with the increment you've made, you can exit anytime. Anytime, because trading takes place Monday to Friday from 9 to 1. So let me say you bought today. Today is when? Tuesday. Monday. Sorry, I'm thinking ahead, sorry. So today is Monday, and then your shares will settle in 3 days. On Wednesday, you can sell your shares if there's an increment. So when it comes to equities, you can exit after 3 trading days, because that's when the shares settle. So you can exit on Wednesday, you can sell and exit the market in case the price has gone up. However, even though it has dropped, you can sell, but we don't encourage that because you'll be making a loss, and we don't want that. We want you, by the time you invest, we want you to make money, not to exit when you've made a loss. Yeah, so you can exit in equities after 3 days. When it comes to unit trust, the shortest period is a month. Yeah, thank you.
Another hand of applause. Any other questions? They're very good questions, I think. Okay. I think from us is just to say thank you. A really, really big thank you. It's been a very engaging session. Just a hand clap to all of us. It's been a very, very engaging session, very beautiful questions. I just pray that we have learned one or two things. I just pray that we've left this place at least gained a little more knowledge from this engagement. We hope we can have a little more. We'll keep in touch with the dean and the head of department. We've had who have really been helpful in organizing this. Just a hand clap for so we thank you. We look forward to more engagement, and a big thank you from the management and staff of the Capital Markets Authority. Thank you. Over to you.
Thank you, the Capital Markets Authority. We've gained a lot. You know, you did this in your financial management, the financial institutions management, those who are doing accounting and financing. So now practically you've heard this. And this kind of engagement is what we need. So we really thank you so much.
She's actually here to help for anybody who has more questions.
Yeah, in fact, she's here. You can keep engaging. Now this is time for opening up account.
Smart 24, driving business. Smart 24, driving business.
Now that we've worked out a plan for our financial goal, we now need to go